Hello dear friends, welcome back. In this video, I am going to discuss on a very interesting and most important topic, which is on how to pick the right stock to invest in. Many of us invest in stocks by taking into account of others' recommendation, and we may end up in losses if we had not invested in a right stock, right? So it is very much essential to identify right stock to invest in. So we are going to discuss the same in this video. Please don't skip the video as you will not be able to understand the concepts if you skip any part of the video. So before we start, please don't forget to subscribe my channel so that you will get notification whenever I post such kind of useful videos. So let's get started now. Coming back to the topic on how to pick the best stock to invest in. What needs to be done? So the answer is we need to do fundamental analysis of the stock. But again, the question rises how to do the fundamental analysis and why should we do the fundamental analysis? By doing fundamental analysis, we can find the intrinsic or true value of a stock based on financial statement analysis. Now again the question is what is intrinsic value and why would we need it? Intrinsic value is a measure of what a stock is worth. This value is different from current market price of an asset. So, comparing the intrinsic value of the current price, we can give investors an idea of where the stock is, whether the stock is undervalued or overvalued. So, in coming slide, we will see how to find the intrinsic value. So, basically, there are 6 steps to analyze the fundamentals of a company. Let us see what are they. The first one is understanding the business of the company. So while doing this, we have to understand what the company is all about, its products, services, clients, projects they have worked on, and if any future business lined up for them, etc. Also, we need to know information on promoters, their shareholding patterns, etc. And the second one is checking the financial ratios, which is very much crucial in picking the right stock. Since there may be many financial ratios, but here we will discuss about essential financial ratios that will help us in fundamental analysis. Let us see what are they. The first one is EPS, which is earnings per share. So if earnings per share has been increasing for last 3 to 5 years, it is a good sign, isn't it? And another important ratio is price to earning ratio, P by E. So lower P by E ratio is considered to give better earnings. So if we divide current price of a stock by earnings per share, we will get PE ratio. And another important ratio is return on equity, which is a measure of company's net income divided by its shareholders equity. So return on equity is a gauge of company's profitability and how efficiently it generates the profit. The higher the ROE is, the better the company generating profits. And the next one is debt to equity ratio. It shows how much debt a company has compared to its assets. So it is found by dividing a company's total debt by total shareholder equity. So usually a higher debt to equity ratio means the company may have harder time covering its liabilities. Correct. So and another next one is current ratio. This is a measure of ability to pay off company's short-term liability dues within a year. So we also call it as a working capital ratio. So how we get this? We get this ratio by dividing current assets by current liabilities. So these 5 ratios play a crucial role in analyzing the stock. So as we discussed earlier, now let us see how to find the intrinsic value of a stock. So this is the formula. As you can see here, intrinsic value is equal to earnings per share into 1 plus R into P by E ratio. So here R stands for the expected growth rate of the earnings. So this is how we can find the true value of a company, and we can understand whether the share is undervalued or overvalued. So the next step in analysis is past financial analysis. Here we need to know we need to know the financial results of the company for the past few years to check whether the company is consistently performing well or not. And another important step is to make comparison of a company with its peers in the industry. How we do this comparison? By checking the USP, which is unique selling proposition. We also call it as unique selling point or unique value proposition. What does it mean? It means the marketing strategy of informing customers about how one's own brand or product is superior to its competitors. So this is how we will come to know what advantage the company has got over its peers. And the next step is to check the debt of a company. If the company has debt, it has to pay the debt amount and its interest also to its creditors before they pay dividend to the shareholders, right? So higher the debt amount to be paid, lower will be the chance of paying a dividend on equity. If debt to equity ratio is less than 1, then usually that stock can be preferred. So this is another important aspect that we need to check in while doing while doing fundamental analysis. And the last step is to check the future prospects and business of the company, since the returns that we get are based on the future business but not on the past events. So this needs to be important aspects in fundamental analysis as well. So So to conclude, fundamental analysis is very important for long-term investors and helps in calculating real value of a stock, and so that we can take a decision to pick a right stock. So in this video, I have tried to put an essential fundamental analysis concepts in brief. Though there are many fundamental analysis topics, I picked the most essential concepts that are really necessary while picking the right stock. So hope you find this video very helpful. So please subscribe the channel to get notifications when we upload such useful videos. Also please hit like button and please do leave comments, because your comments will be the valuable input for us. And thank you so much for watching this video. All the best. Have a great day.